Nadex. March 9th. I say it every week that I can't believe it's there, but I I I really feel like we're like 2 weeks into 2021, but we're already into March. It's kind of crazy. Um, Happy to be back. Very interesting week in trading. I don't know if many of you guys have been attending the morning sessions, but this is actually today, actually in the next 24 hours is kind of a very, very big deal, both for the economy, for the US, and really for the world. Really kind of setting the stage for, how stimulus and recovery is rolling forward. Um, so let's just dive right into things. I think today is one of those days that we do have a lot to cover, we have a lot to review, and we have a lot to talk about of potential scenarios that could happen. Jin Jin is behind me today. She's excited. She's happy. She is working at her desk. So if you guys hear a little voice, there you go. She's excited. She heard me mention her name, and she's pretty jacked today. Um, so let's just dive right into things. For those of you that are new, I know we have a pretty good following at this point now. It seems like every week we have more and more people log into these events, and I really appreciate it. And as you guys know, for me, every week I want to give you guys a new way to look at something, whether it be a new thing to add to your current strategies, a direction to get you started if you are brand new. I know we have a bunch of brand new traders that have been joining us lately. Um, for those of you that don't know me, that you are new, welcome. For everybody else, I'll give you the quick 1 minute speech about who I am so everybody understands. I've been trading since about 2000, right around the tech bubble time frame. I live in the DC area, so the tech bubble and all the companies in Northern Virginia, everything that was near and dear to where I was. I was directly in that environment. My dad worked for a tech company. Um, Always been interested in the markets. I'm not a 12th generation trader. My father worked for IBM. He was a program. We looked at ones and zeros. So it was something that I kind of ventured into on my own. I started just like almost probably everybody out there, right? I was buying books. I was trying to attend seminars. 1999, we didn't really have YouTube and the resources that we have out there, which is a good thing and a bad thing, right? Just because there is information doesn't mean it's great. But I did kind of fall down the same path. I learned a lot of the wrong ways to do things. Hey, Jinjin, shh. I started with traditional options and stocks like most people do because you don't really realize that anything else exists. Um, then found Forex. Absolutely fell in love with the market. I love the idea that it was 24 hours a day. It wasn't on somebody else's time. I could do it whenever I wanted to. Found futures obviously because one kind of leads right into the other one. Spent a number of years doing that. Ended up going and working for a company helping teach people to trade. Became a financial advisor. I did that for a short time. Worked for one of the big three banks. Got a totally different view on the market. Was able to see kind of what the inside looks like. And then I was there for a bit, learned about bonds, and then left that market to go back out and teach again. I realized that, being an advisor wasn't exactly what I thought it was supposed to be about. Dial-in phone calls and trying to be a sales guy was not what I thought managing money was really about, and that's really kind of what it boiled down to for me, in the position that I was given there. So, you know, kind of crazy that I could analyze charts better than one of the top guys in the company as far as wealth under management. It was kind of crazy and eye opening for me. So I left. My passion's always been in teaching. I actually had the opportunity to kind of work up in New York City, and I actually my where I stayed was literally I could throw a baseball from the building's front door to the New York Stock Exchange. Every single morning in New York, when I was working up there, I walked past the New York Stock Exchange. I got to hear all kinds of crazy stories. I got to go have lunch and dinner at places that the big floor traders were sitting in and eating, and a lot of these historical places. So, I could look out the front of my office and actually see the bull and see people rubbing both ends of it, right? Um, so again, great experience. So hopefully you guys are able to pull something from today. As I mentioned, I want you guys to get something from each and every session that I do, whether it be a golden nugget, a trade setup, a new way to look at something, or even the confidence to try something you didn't think you would ever do before. So that's who I am. That's what we're here to do today. Before we begin, talking about any charge or risk or anything like that, I do want to make sure we cover this Nadex risk disclaimer. That trading on Nadex involves risk and may not be appropriate for all. Members risk losing the cost to end other transactions, including fees. Now, you should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results. None of the material presented herein is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Now, Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the IG Group. All heard a thump, and it's just my daughter with Play-Doh and a dinosaur. Um, so let's cover the agenda. What we're going to do is we're going to talk about what upcoming news events we have in the next couple of days. For those of you that have been here before, you know I absolutely love news trading. It helps me really kind of dial down when I need to be in front of the computer. I am not one of these. Not one of these traders that wants to sit here for 18 hours a day watching the screens nonstop with 27 different monitors. I say that, but I do have three. But again, for doing any type of streaming or webinars, it's nice to have more than one up there. And then I have one on the side with some charts on it for kind of things popping up. But again, I like to know exactly when I need to be there. So we're going to cover upcoming news events. Obviously, today, actually in the next 24 hours, is extremely important with that U.S. stimulus package coming out. I'll cover that in a sec. Then we'll dive into indices, see what they're going to do, see how they're reacting, and see where they could potentially move based off the stimulus and some of the levels that we have out there. Um, Yesterday, if you guys attended our morning session, we do a morning session from 8:45 to 9 a.m. Eastern Standard Time. Yesterday, the two levels we mentioned for the NQ literally bounced off both levels and kind of brought us back up to where yesterday started this morning. So definitely cover kind of where more levels like that are potentially at. Then we'll dive into forex. I know not everybody out there is a forex trader. It is a much, much, much larger market than the U.S. stock indices. Many people, futures traders are like, oh no, futures is where it's at. Yeah, it's such a small market, and it's very kind of nearsighted as far as what the global kind of picture is. It's funny, overseas, they see ES and NQ, they're like, who cares? Right? Everything's about forex overseas, so it's a very, very large market. And again, one trading 24 hours a day, there's opportunities at night before you go to bed that people never even look at. And it's again, my favorite news is Australian news at night. I have, some of my students are, all about calling it the root trade, right? The kangaroo trade. Then we'll cover commodities. Gold, oil, and silver. There's obviously other commodities that you can trade at Nadex, but those are the big three, and we'll cover those at the very, very end. Gold is something, and oil, actually, in general, are two that we've been highlighting a lot. There's been a lot of levels, a lot of movement, a lot of volatility over in those markets. So we'll kind of see what's shaking right now. I know yesterday there was a bunch of movement and then a bit of retracement today in oil, but again, tomorrow is oil inventory report, and we'll see where it rolls out. All right, let me switch across now. We will go over into the current news events, right? Right now, you guys know that there's a couple different websites I use. I use Forex Factory because I like this scanner up top. I do also use DailyFX, and I'll show you some of this as well today. Both of them are different in the sense that they have kind of a different layout. Both of them, again, you can find the economic calendar and the most massive, the not massive, but like the most important, latest, hottest news, right? They all have those things out there. I like it because of the 24-hour pip changes up top. It's a very easy scanner. It's something I've used for years, but it kind of gives me a gauge of what the global market looks like. And yeah, I say global because again, currencies are global, what each nation is doing. And for the most part, we're seeing some pound strength, but it's kind of like what we saw last week, but in reverse, right? Actually, even yesterday. Yesterday, it was a lot of pound strength, and the end of last week, pound strength, and it was fighting the dollar. Who was going to be the strongest? Well, today, we're kind of saying the opposite. We have pound strength. That's still here, right? You're seeing the pound up versus the dollar 67, pound yen up 30, euro pound is down 14. So again, still some pound strength, but now the dollar is kind of flipped on us, right? It's kind of flipped the script a bit. And again, we're seeing the dollar yen down 32, dollar Swiss down 65, which again, this has been a crazy trade for the last 2 days. And again, dollar CAD is down. And again, Aussie dollar is not there yet. But I wouldn't be surprised if this one kind of starts rolling as well. Really, there's no news today. Not that there's no news, but there's no big economic news releases today, right? We have Governor Lowe speaking at 5 p.m. Eastern Time. Again, this is for Australia. He's kind of like the equivalent of Powell. If you guys know who Fed Chief Powell is. Now, tomorrow is the big day, all right? And again, there's one thing to add in here as well. As you guys can see, we've got news now that the vote for stimulus is going to be tomorrow morning. Looks like a senior U.S. Democrat, Hoyer, says that the U.S. House of Representatives expect to consider and pass the COVID stimulus bill at 9 a.m. on Wednesday. All right. Now, why this is interesting, right? Again, we all expected it. It was supposed to originally come in today, but talk about like a bang, bang kind of crazy morning, right? Well, we have CPI, which again, if you don't know what CPI is, basically CPI is an early gauge for inflation. Okay. CPI and core CPI. You don't have to know the difference between the two. It's not necessarily important. But when you see inflation, the first thing people do is think gold, 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 gold. When you see things like stimulus, the first thing people say is gold, 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 gold. So the fact that all eyes are kind of focusing on that could be a very, very interesting morning for gold tomorrow. Now, we'll do the best we can with analysis, but you know, looking at this thing, 20 hours in advance using kind of smaller time frames is a little bit more difficult. We can talk about some major levels, and we'll break those down and see what it looks like. And then we go 8:30, then we get stimulus passed at 9, then at 10:30 we jump into everybody's favorite commodity. It's funny. I had a student go, people like gold much more than they like oil. I was like, oh no, no, no. If you think about it, what do we use gold for versus what we use oil for? People will be a lot more angry if we had to walk everywhere, right? If they didn't have their cars. And I get it. People in the city are like, we walk everywhere anyway. But you guys all rent cars and get out of there anyway. But yeah, so that's why I'm saying crude oil is probably America's favorite. Other countries could debate, and theirs is gold. But again, we had an absolutely huge, huge miss last week, and the crazy part about it was huge surplus. Crazy part about it was the price went up, right? And again, we had some overseas tensions, we had some missile strikes, we had some drones, some port attacks. Again, weather seems like it's finally calming down. But again, you can see lately the forecasts have just been totally wrong. I made a joke a few weeks ago that there's a primate with a dart. I mean, prove to me that I'm wrong, right? Prove to me that I'm wrong. I mean, these are pulling from, big sources, and these are the experts. I mean, these are the forecasts, and you can see that we're, again, 20 million barrels off. That's a big deal, right? This is a 7 million flip. This one's a 6. This one is another 7. So this one you're like, oh, it's close, even though it was almost twice as bad. So again, tomorrow's a big, that's a big day, and then followed by bond auctions. And bond auctions, it's been kind of a hot button. And again, bonds are a little bit more advanced. As I said, I've been trading 10, 15 years before. Probably about, actually, I guess it's not 10, 15. It's probably like 12 years before I learned anything about bonds, and I didn't realize how important that market actually was as well. I'm not telling you go out, you have to be a bond scholar, but there's a lot that, again, the bonds market controls and the currency market controls that people just don't understand. Thursday, we have a big release for the euro. Now, the euro is kind of and again, the pound is benefiting from that right now. As you guys can see, there is no pound news. And what do we keep seeing? Pound strength. Well, where the heck is it coming from? You guys ever heard that statement that no news is good news? Right? That's kind of what the pound is kind of dealing with. Staying out of the headlines, having no economic news releases in this environment where we're sitting in a pandemic tends to be positive. Okay. The euro finally has some news coming up, and it's a monetary policy statement. They're not expected to change the rate at all, but the statement talking about what the recovery plans look like, how fast they think it'll be there, shapes of the recovery, how long it will be until they could even potentially consider raising interest rates, things that could strengthen the euro, right? All that is inside of the monetary policy statement. So again, the nice thing about this is at the close of business, or the tail end of business for the European Union, for the UK session. Thankfully, it's not a 3 a.m. release when they start. It's a 7:45 a.m. Eastern Standard Time, or Eastern time. Oh yeah, no, I guess it's Eastern. I guess I think it's Eastern Standard, right? Daylight savings time, I believe, is the 14th. So I think this is right beforehand, right? So I think it's considered Eastern. But anyway, 7:45 Eastern. And then the press conference right behind. So that kind of gives us our morning kind of jolt right there. Plus, we have unemployment numbers. We always have the unemployment numbers that come in. That should be interesting also. And then Friday, we have the employment change and unemployment rate for Canada. Now, while this is interesting, it is expected to be positive. And I'm going to click these just so you guys can see. This is why I love news. Last time, look at this. There was expected to be a little bit of a down draw. They were going to lose a little bit of jobs, right? Just losing 40,000. It came in at 212, so it was a big kind of smack in the face, right, for the CAD, as well as the forecast last time that unemployment was going to go down to 8.9. I mentioned I expected like a 9.1 on this one. Coming in at 9.4, also not good for the Canadian dollar. And you may say, okay, what do I do with that? Well, guess what? That was pretty weak for the Canadian dollar. And again, we've seen the dollar CAD currency pair just skyrocket. So again, I know that at 8:30 there's a big news. I can jump over here and trade the dollar CAD. That's why I love it. So besides that, that's really all we got. And again, stimulus is a big thing tomorrow. If there's any hiccups with stimulus, which I don't expect there to be, That will get signed, and then President Biden is supposed to sign it by the end of the week. I know right now, even though the Senate signed it on, they agreed and signed things on Saturday. I know they were waiting for it to be transmitted over to the House. And again, I kind of made this joke earlier. I mean, when I send email, it's like an instantaneous send. Like, I'm not sure why it takes 3 days for them to send that over, but it takes 3 days. So who knows how long it'll take the Senate to send it to Biden, and who knows how long it'll take him to sign it. But it should be rather soon. Unemployment benefits are running out on the 14th, so it's kind of one of those like, hey, the government's going to shut down if we don't sign it type thing. As well as some of the news, some of the news we've heard out there. It would be a nice little positive kind of push that I believe Biden is planning to speak on Thursday or Friday, and I'll tell you right now, if it's not signed before then, it's not going to be a great broadcast for him. There'll be a lot of questions about it, so I'm pretty sure that it will be done before then. So that's news. All right, so let's jump over and go into charts, and we're going to go over and cover the indices first. All right. All right. I was like, wait, what is this message I'm getting? All right. Let's start with NQ because this is where we started. So yesterday morning, I left this kind of yellow circle up here. This is where we were sitting yesterday morning, and we talked about having levels up here at 127.70, and it hit it and kind of spiked away, came all the way to the opposing side and pushed back up again. Now, you can see this morning thus far, and I'll drop it down to a 30-minute, make it a little bit easier for us. You can see that it's a level that's been hit, what, 1, 2, this is hit number 3, and we're starting to base. Every time that a level gets hit, it gets weaker and weaker and weaker and weaker. And a lot of times, most times on the channel, we'll draw the X's out here and we talk about how hit number 4 is typically the one that, will break. In this case, when we got the basing, it's a pretty telltale sign it's going to break. Now, it is 12:30 in the afternoon. It has kind of had its initial push up. Here is the kind of 8:30. Here's the 9:30 kind of push. And literally, we got one candle up, and then we just started basing back and forth, and now we're starting to drive into this lunchtime hour. Now, looking at the zone at this point, because it based, this is something that we can use for a short later on down the road. As you guys know, I love those Harry Potters of those previous violated zones. Right now, it's more set up for a long trade, but I am looking at this 112, what is it, 12.811. It's a level we had basing. We had price try to get there and get front run. Now it's kind of getting back up there again. It's kind of one small level. Um, you know, it's a smaller level, something like stimulus being signed. Most likely that's going to have the power to drive through this one. I'll bring this back up and show you on the higher time frame here. There it is. I was like, I know it's here somewhere. All right. Here's currently the red. I'm sorry, the red, the blue, and the green is currently what again, we've been talking about and where we've set the curve up at. For those of you that are new here or you guys are like, wait, what's the curve? The curve is something that I use that is kind of high quality buying and selling areas. And what it does is it provides a bullish or a bearish bias for that specific time frame, right? Depending on what I'm looking at, whether it be an indice or a commodity or a currency, I use different time frames, right? Um, where we are right now, we're kind of sitting in what I call no man's land. You guys can see this kind of bluish area here. Being in no man's land, it's not necessarily my favorite area to be able to initiate trades from, right? I mean, there was longs obviously down here. We're looking to go long, and you can see all these green, pushes up, high, was having many problems and kind of crash back through again. But typically, when we get in this middle area, the trade setups are not necessarily as great because it's kind of stuck in the middle, right? It's in that kind of no man's land, is what I call it. So I would say, potentially we got a little bit more of a push. We got about 20 more points higher, and we got a little bit of a level here. And again, this is a 30-minute level. It's one potential area where if we start getting a basing in or a hit and a pushback, we could get a confirmation roll off of this one. And again, you guys will hear me say Harry Potter a lot. Harry Potter is, you guys all know, what a lightning bolt looks like, right? And again, this can go in many different directions, but more or less a Harry Potter is something along those lines. And it can be flipped, it can go upside down, it could be for a down or an up or just kind of a confirmation turn. With one of those Harry Potter bounces, I think 12.811 is a decent area. We had a short up here, and again, that one is over with. I would say that the next, at least on an hourly basis, the next really clean level, and I say clean, but an area where we have some type of confirmation would actually be sitting up here. Right? Let me change this to green because it shouldn't be that color. I'll go ahead and put a price tag on it. We'll just do it here for right now. Right there. So it looks like 13,169.50 is where that level would come in at. Now, Why is it important? Why do I like that better than the 12, 8, 11? One, you guys can see that this would be inside of that blue range, right? The no man's land. This is now pushed back, right? It's pushed back into the upper third. And looking at what we saw price action wise, the last time we were here, we had a base, a drop, a pullback, and then it just got absolutely hammered to the downside. So, you know, is this a trade possibility for today? Going from what, 1278 all the way up? Probably not. But could this be a reaction to stimulus popping us up before rolling us down? Sure, absolutely. Yeah. Yeah, I mean, who knows what's going to happen later in the week? Maybe the CPI number looks great and then they bring it right back again. So it's definitely a level I'd be looking for a reversal. Again, we'll see what price looks like as price action gets a little bit closer. But again, right now where we are at 1230, I'd say there's a small potential reversal here and maybe even a little bit of a bounce off of that off if we can break through to the top side. But besides that, I'm keeping that 13167 on my radar. Now looking at the S&P 500. Okay. S&P 500, I can move this across to there. Again, you can see that we were in this upper quad, or the upper third. Now, price is also pushed up in this 38.93. Now, this was a level I had earlier, and again, it's basically been straight up on the hourly. I don't think on the 30-minute we've had really, there's been no pullbacks whatsoever here. But I will say, and I don't know if you guys can see this. Let me see if I can zoom in enough for you guys to see. Do you guys see this little pattern right here? All right, do you guys see this? When wicks do that on a push, it tends to be kind of a telltale sign that there are buyers establishing themselves here to kind of break through and punch higher. All right, so it's a decent level that we're in right now. Again, news has kind of pushed this up. It's a level that we've been to before, but again, you can see that we have one push here, we have a push here, we have a push here, we have a push here. So, is it the freshest of levels? No, not really, right? Not really. I mean, if we had blockbuster news that drove us in, then yeah, we could take it. But right now, I would expect some type of a basing through, and we really need to kind of push up to a little bit cleaner of a level. Um, there is such a level here. Let me go up to 2 hour. We can see it a little bit better. There we go. You can get a little bit better of a view here. And again, there's those wicks I like there. And again, I guess technically you could say, hey, listen, aren't there sellers in here? Yeah, there's sellers all in this area here, but the sellers keep kind of getting lower and lower. I would say right now, and again, it's not based off a 2 hour level. I believe it's based off an hourly. Actually, it may be based off a half hour. I'm gonna make sure I give the right data here. Yeah, it's based off the half hour. Here I'll put a ray so it's a little easier for you guys to see. Boom, and boom. Go back up. So right now, I'm kind of looking more for that 39.15. I mean, right now we're low volume, right? It's lunchtime. There's not a lot of people out there. There's no news. There's nothing. They can just literally, they're going to go with the trend. But if we see some basing, there may be an opportunity to, if you wanted to take this longer for the day, sure. But I'd be looking for retracements at this point. We're up in the upper third. And a way to play this one, we know that we have, buyers stepping in here. I mean, we could probably refine this down a little bit. I mean, if we really wanted to we could put it here and here if we really wanted to refine it down on like an hourly basis. I might also just stretch this out. Let me pull this across. Pull it there. And let's punch it here. Let's take this and go there. So right now, so it looks like if we refine it down a little bit, 39.19. 39.19. And again, another thing I want to add to this is you can see here when we have very large spikes, we tend to retrace. Very large spike, we retrace back again. We're kind of building one of those very large spikes. And remember, we had no news today whatsoever. So yeah, there's that. Um, yeah. So again, this is an interesting level. If we start to base, if we punch immediately back, and then again, yeah, there's a little bit of a short, but I'd be very cautious with that. The way that those candles formed in here, again, that tends to be a little hidden sign that, hey, watch out, we got some buyers here building the base for us. And again, what these buyers will do, these buyers are set here as price rolls down to grab more to power this up into that 39.19 level. Okay. Let's go across to the Dow. So the Dow, yesterday we talked about this, and we mentioned a break of 31.70. We talked about it coming back. Unfortunately, yesterday, I posted the GIF inside of my Discord channel. You guys remember in Forrest Gump, that movie with Tom Hanks, where literally he comes running down the road and like passes the camera and then runs out the other road? That's what this was like yesterday, trying to chase this thing. There was just no tracing it. It wanted nothing of it. I was like, come on, pull back, grab it. And it just went boop, 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 boop. It just kept going. It just would not pull back. We mentioned the 31,893 as being a level where, hey, listen, you got to make sure we're getting profit. Depending on how it bounces through, there may be a short in there. But what's interesting, and again, I'll bring this back up to an hourly. You can see that we had sellers there, and it hit and it started to chunk through, right? It started to cause a problem. On the 30-minute, look at this. Based here, pulled down and became the bottom and popped. Then it finally broke through and came back and tested, and it did it again. Then it came up and it based again, then based again, then peeked its head out, popped up again. Then it rode to the top, came back down, tried to ride the bottom, went right back up, rode the top, came back down, rode the bottom, and then finally broke out again. So it's an interesting level in the fact that it keeps attracting and sucking people in. There's not much we can do with it yet right now, but it is something that we're going to have to focus on a little bit later down the road. So, a couple of things I'm looking for in this one right now, right? Again, looking across, this is where this one gets difficult. Why? Because of this, right? We have nothing, right? There is nothing back here, right? So at this point, there's no way to say, hey, listen, here's a potential area where we can see price turning, right? We got this one little candle right there, and that is it. There's nothing. And again, it looks like we are just about at that level. What do you do with something like that? Well, eventually this is going to create a top, and eventually it will turn and kind of retrace back again. So the best way that I can kind of help you guys learn how to play this one is what we're looking for is a decent level top. What you're looking for, actually, I don't know if you guys can see this or not. And this is a little bit of teaching. We don't have it right now. Is do you see this candle right here? I don't know if you guys can see this candle. That is my favorite candle formation, right? Where you have a wick that's a little bit longer than the body, right? It tends to be a red candle at the top of a green. We're looking for that up here. That gives us our new level of established risk on the top side for shorts. Right now, though, unfortunately, there's not much we can do. We can only look for longs right now. And I would say there's a couple different levels. And I mentioned, we can't do anything with this level yet, but we will be able to use it in the future. But right now, we're not there. I would have to say, bullish and bearish. I think you need to stay bearish the Dow. There's nothing out there on a fundamental level. There's nothing out there on a technical level that won't tell you this won't continue to push higher. So if you were able to get a position, and there was, positions in here where you're looking for a break here to get into a position, but it just continues to kind of rally and go further. This isn't and let me bring this up too. We mentioned this morning that things were transferring from the NQ back over into the Dow. And again, NQ is obviously moving a bit now, right? But I'll tell you right now, having concerns about COVID-19, having stimulus coming out, and think about it, the people that were the most hurt are the ones that are going to be receiving stimulus checks. That is a good thing for the Dow, right? So again, I would say for the rest of the week, I'd be looking for bullish opportunities. There obviously will be pullbacks, right? There obviously be pullbacks, but the best way to do this is find levels of stabilization and take it from there. Another thing too, I want to note on this one, and again, it's kind of late in the day now to do it, but the way the Dow lately, and actually all three indices, has been to trade this on the 15-minute charts. Okay. Again, I just want to point out that here's where the open was this morning, right? Here's the open. And again, I'll just steal this across. Here was a level of basing from that level, and there was the end result. Okay. Looking at hourly and 30-minute charts at 12:30 is not going to get us an instantaneous trade. This didn't set up, but on the 15-minute in the morning. So tomorrow morning with CPI, a stimulus package, and then oil right afterwards, what I would be doing is I'd be going and looking for levels of basing where you have large bodied candles that are popping off. Could it be this lower level again? Sure, it could be. We may have to, here, I'll drag this one back a little bit and pull another one in. We may be looking at this as a potential area tomorrow morning. Again, if CPI pushes its way in, and I'll tell you right now, if CPI is a miss, that tends to be a good thing for the overall market. The reason why is CPI is a gauge of inflation. The way you control inflation is by raising interest rates. Raising interest rates is not good for the stock indices. So if we have a miss to the downside, there should be a launching point tomorrow morning for the Dow in particular. Okay. And again, that may be a level we watch, but drop down to a 15-minute, and that's how you trade it. Let's shift gears and let's go over to currencies now. All right. You all right there, Jim? Let's see. I need to switch this across. There we go. All right. So first things first, Aussie dollar. This is a level we've been dealing with for a bit now, right? Last week, I think we talked about it. I know I've talked about it for my group for a while. This is actually an hourly level, and you can see we've kind of pushed up. We were expecting a bit more of a retracement than we got, and it went to about a 1 to 2 right now. I would say this one is still in the position right now where I'd be looking to go short. It's consolidating right now. Um, the Aussie dollar is in an interesting place right now because obviously, having being dollar based and talking about stimulus and inflation is one thing, but the Aussie is also a proxy for gold. U.S. stimulus with a lack of inflation doesn't really kind of make gold prices go crazy, and it doesn't necessarily. And we've seen gold has been kind of really heading to the downside. I mean, once we broke through 1800, it was like 1700. Who? No problem, right? Um, Kind of hard because typically when gold goes up, Aussie goes up, and then the dollar goes down. But that's not necessarily what we're seeing. So right now, I would say 77.13 is a decent level that I've been looking at. You can see it's a 30-minute. It's marked off on the 30, but it's also kind of the 60-minute level here that we kind of bouncing in. And again, is it fresh? Is it clean? No, it's been here about twice before. But it is, you know, on this chart, you can see I use just gray and this pink color. We're kind of in that no man's land. So I like it to push back lower. I think that's decent. And again, this is going to be one of those ones that I expect it more to be a mover tomorrow morning between CPI, inflation, and stimulus, all kind of within a half hour of each other. I'd expect some movement. Now, if CPI, and I just told you what happens if CPI is a miss, right? If CPI is higher than expected, okay, go ahead, go potty. You can do it. If CPI is higher than expected, then the question kind of boils over to Powell and says, "Hey, listen, inflation is starting to get moving faster than we want. What are you going to do about it?" His answer is to raise interest rates, which again, that is a dollar strengthening tool, which again falls right into this on a technical basis to drive price back from here back down into one of these lower ranges. Probably most likely down into, I mean, with something like CPI, probably back down here into the 75-80 range. So again, that's quite a bit. That's quite a big mover, right? 50, 100 pips, is what the potential is tomorrow morning with CPI and the stimulus. Now, ASEAN also in a similar situation. Now, I mentioned yesterday for my students, this is a level that's been hit a number of times, right? I liked it. It worked here, right? Came back up, based in there again. Basing is a telltale sign that we're looking for this thing to go higher, and it did. It went up, it based again. This pattern went up, based, pulled back, and then took off. Now, this one actually did go through the bottom side a bit, and again, when it started basing, you could have grabbed it on the lower time frames and caught it on this side, but it did go higher. It has since gone up and grabbed this upper level at 83.92 and then kind of rallied all the way back down again. So where we are now is kind of interesting, right? Aussie dollar is set up more inside of a short. Aussie yen is also set up in a situation like this. We've pulled back to the original level of interest, right? And again, I'll remove this just to kind of clean this up a little bit so you guys can see it. I don't need this right now. That went up. Here's kind of the original level that we're focusing on. Oops. Right there. With it basing on the top right now, it is also setting up for a similar level kind of short. Aussie dollar being in a short, Aussie yen being in a short situation, both of them are kind of in the same route. Now, I always set up every trade, and I want to see if I can get a 1 to 3 risk to reward ratio trade in. Here's where the 1 to 3 is. It is a little tiny bit low, right? And I do think we need to use a little bit of caution because remember, interest rates, more or less through a proxy, are going to affect the Aussie, but they are also going to affect the yen. I do like it pushing back down again. I think it's a decent level short. It had just pushed in the upper third over here, meaning that, again, we went into the neutral range up into the bearish range, and you can see the second it peaked its head above is when it rolled and turned right back down again. So do like this one for a short. The level that I'm looking for is probably going to be right around this 83.50. I mean, again, it's a psychological level. We go through the 50, we push down, we base, we pull back, take that short down into the 83.20-ish range. Again, 10 pip risk, 30 pip reward is, probably what we're looking for in this one. Euro yen. Euro yen also had a similar setup. Now, yesterday afternoon, I do a presentation for students online right after we talk in the morning at 9:30 typically. We had an interesting position where we had Aussie yen, Euro yen, and pound yen all approaching levels where we were looking to get short if they went just a bit higher. And this one did. It touched the level at 129.53. It based a little bit, came up and gave us a second, and now is dropping back down again. And we mentioned profit targets need to be down here at 128.88, and that's still valid, right? Now the 128.88 level, again, if you're in the trade, if you're not already in the trade, it is a little bit too late. I mentioned the 1 to 10 in this one being a little bit far. I do think though it presents an interesting scenario because we've seen price come down. Let me move this out of the way so you guys can see it a bit. We've seen price come down and tag a level right here, right? We've seen price come down and then tag this level here, and then we've seen price again kind of make an attempt here, although a little bit higher. And this is hit. I mean, when it comes back down, this will be hit number 4 here. So it'll be hit number 3 of the lower level, hit number 3 of the level here. So it's interesting that it is setting up itself for a bit more of a continued short. Now, again, we're bearish up top. We hit our level, right? Strong push off, again, strong push off, looking for some type of a basing and looking for a short. Now, I'm actually looking for a short in this one to come down. And again, I need to see what it looks like, what the patterns are around the 88 the 128.80 range, but I'm looking for this one to come down and potentially come down to 128.27. Once we get down to that level, then yes, there's a different story down there, but we got enough room right now to run. It's about 76 pips. It's about a day and a half worth of movement. It's probably more of a question for Thursday, Wednesday or Thursday. Probably Thursday for that one. But right now, I would say look for this to continue to come down. If we can get some basing sideways, look for a break of 126.70 and look for about what? About a 40 pip, 45 pip drop down into this lower zone down here. All right. And again, we've had buyers step in, and this has been a tested area. This will be hit number 3 of this 128.23. Okay. Just like the other two, the pound yen. We mentioned that the pound yen was looking for areas to run into. And again, same pattern. It came back up, it based, and ended up pushing back down again. I did mention yesterday, I know for my students, that Aussie yen, Euro yen, pound yen were all in the same type of setup, looking to go short. But the pound is just not something I'm willing to kind of go against right now. With no news, being a smaller country, with recovery on track the way that they are, yeah, it's down. It's pushed down about 44 from that level, but it's just not something I'm really on a fundamental level looking to get short because I think with everything going on, if there's anything good COVID wise, they're already on the mend. I think they're already going higher. So again, it just goes to show you that again the technicals went out in many cases. With those three was kind of giving us an idea of what was going to happen with the yen, but it wasn't something I was interested in. One area that I will draw attention to is this here area down here at 150.44. It's not a fresh level. Actually, the level is kind of here, right? Put this to white so you can see it a little bit better. Here's where the actual level is, and the reason I like that level is because I like the way the candles formed. Their dimensions are good. I like that you keep seeing the wicks of this go higher, 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 and I love the fact that it gapped into that level and then took off over the weekend. All right, so if we can push back down in here and maybe we actually use 150.37, this is an area where I'd be willing to say, hey, listen, we got some buyers here. We've seen them in the past. It's gapped into that level. It supported itself. The 150.37 level could be a nice little level to take. And the risk to reward ratio on that one would look something like that, right? Would be a break and an entry of 150.45. Okay. This one. All right. So pound dollar. Kind of the same thinking, right? I mentioned that we had a level of sellers. I mentioned we had an area. And you can see for the aggressive people that wanted to trade this one, yeah, it hit the level and it dropped back and it moved about, I don't know, about 27. What is it? 33 here. And then the base over here is 27. So it was a fine target. You could have taken something intraday off of this one. I'll bring it down to a 30 minutes so you can kind of see it a little bit better. Let's see. Right there is the European Open. So again, for those of you that know my European trading, here was your short from the 3 o'clock down, and that did hit your 1 to 3. So right now it's kind of busted through that level. It's a level we got to keep focused on, and it's the same thinking. In looking at this, yes, it is a level. Could you have taken a European session trade out of it? Yes, absolutely. Do we want to be going short? Right? Is it the best thing to go short inside of the bottom third? Right? Not really. We're looking to go long here, not short. So again, it was a single session type trade setup. Right now, I would say keep this level on your, keep it on your radar. Not much we can do with it right now, but it's one that is, again, it has played tops and bottoms twice now. So I kind of want to know where it's going to come in next time it pushes up. I will say, looking higher, I do like this level right here at 139.94. I love the fact that this came up based in one candle and then got hammered down in two. and that kind of hammering was 122 pips. So that's a lot of strong movement. It's deeper in this middle section. So again, right now I kind of want the dollar. I kind of want the pound to continue to drive higher this week. But late week U.S. news on this one could literally send this tumbling with some dollar strength coming in. So that's kind of, and the reason I'm saying keep this yellow on, and again, I'll take it off now so you guys aren't confused about the trade setup. The reason why I want to stay on is because if we get short from that level, this is going to be a potential profit target for me down here at 190.06. So you're looking at about almost 90 pips to the downside for that target. All right. Which again is going from middle to low. And again, low is where we want to switch to a bullish bias. Hitting a level that we've seen again was a top, and then again bottom over here as well. So kind of setting up for later in the week on this one, right? But we need some more dollar. We need some more pound strength or some dollar weakness to really give this an oomph a little bit further, right? Euro pound. Euro pound just shows you again. We've been sitting inside. I guess I'll do it on this one here. We've been kind of smacking around and literally going sideways. I can delete both those. You can see on a 4-hour chart. I'll pull this back so you can see it. There's the level, right? Look at this. Is there a trend here? No. No. So a lot harder to do. And you can see this is a 1-hour chart. You know, there was a little bit of a push up and literally just drove us right back and we're in the exact same spot we were, you know. So not really a trend sitting inside of a 4-hour level. To take this on a purely technical based level, you're saying that the pound is now getting weaker and the euro is getting stronger. Remember, we have European news this week and we have no pound news. No news is good news. So it's one of those situations where I don't necessarily want to bet against the pound. The euro, I think, is in a worse situation just based off the sheer number of member states that they have. Um, you're hearing numerous different news releases from Germany. Italy had some issues. I think just by the sheer volume and the territories and the borders and the different policy and the recovery in each of those countries, I feel like the European Union has a much more difficult time. I feel like this is like the worst case scenario for them, just because of there's so many chiefs and chefs in the kitchen, right? So it's just one of those trades. I still like this one down. I'd be looking for a decent level break. Even on a daily basis, you can see that. I mean, it's way down, but really until we get down to this 83.95 ish range, I'm not necessarily looking at taking this one, long anytime soon. Okay. Now euro dollar. So euro dollar. Let me mark this guy off. Let's see. We're good there. There's our 3 o'clock candle, and there's our 9 o'clock window right there. Okay. For those of you that don't know, I keep tracking this for you guys, just so I'm hoping that you guys will look at this and realize that these have. I mean, there's movement associated with this. This is the European session movement. Sometimes it's big, sometimes it is not so big, and it really depends on what's going on that day, what day of the week it is. Now, there are European-based moves and there are dollar-based moves, okay? Today, you can see that this one, for the most part, was a European-based move. It was dollar weakness, euro strength, and then really, once we hit 9 o'clock, we've been kind of stuck inside of a channel of only about 20 pips. So really not much. You're not going to be looking to trade too much out of it. But on a 4-hour basis, you can see that we're pretty low down here in the curve, all right? Down here at 118 is a level that we've looked at, we've talked about, talking about potential profit targets. On a daily basis, you can see that there's really not much showing up until that level. This is one of those ones where, unfortunately, there just hasn't been much to grab onto. I would say right now, as far as getting additional shorts, I mean, you could have drawn this and said, hey, listen, if we get to here, I want to take a short off of it, right? Unfortunately, if that was your plan, it didn't work. You missed it by just a little tiny bit. I like the level here. I like the way that base. I like the way there's kind of sitting right here. I like the way that this kind of gave us a little bit of a hump and then accelerated very fast out of it. I would say right now this is a level, and again, this is an indicator when there's the indicator does some calculations that you cannot do with your eye, or I guess you could if you were really good with calculations, but it's not one that I can do with my the naked eye. I like that as a zone. I like the way it kind of moved around here. I like the way that it's a 4-hour zone. I like that it's, again, there's one candle of basing in there. I like the punch out of it. I'm kind of looking for that as my next level where I'd be willing to short. And remember, if you short the euro dollar, what you're saying is that the dollar is a stronger currency than the euro. Okay. That's how it plays out. And I think this is, everything going on. This is, we have potential to get up down here to the 1960. Again, CPI or the stimulus both can bring this up to that level in the overnight. The thing about this one and what I would watch out for is a lot of times what we've been seeing is in the European session, we're getting kind of a telltale sign it's moving to either put this on sale or make it overpriced before news. Okay. Um, Better way to put that is, if you see good news, right, and you're like, hey, that should send price up and it goes straight down, it means that it was manipulated to go higher so somebody else could sell it for a higher price before it was going to go to the downside. Kind of the same thinking on this one. If we can rally up and we're talking, let's see, how many pips we got here? It's about 67 pips. It can do that from now till tomorrow morning, right? It absolutely can do it inside of the European session. The European session is typically about 44 pips in this pair. So, combined with that, it's definitely a level watch out for and look for a, potential short to the downside, right? Something along these lines here. Okay. Dollar CAD. As you can see, Dollar CAD last week, and again, I'll bring this back up to 30-minute. We talked about many different opportunities. It went back high in the curve, and then it came back down. And we talked about it basing and looking for a short. It didn't. It slammed into this area of buyers, which again was a big buyer, and then literally took off. All right. But now, as you can see, we went up and we went back into another level, and we're kind of trying to get low again, right? This level was important because it was the first true level of buyers coming in the bottom third, where again, we're looking to go long and it touched it and it was like, oh, we're long biased, and then went right back up again. So I'm curious to see if the next one is going to be the one where it bases. I do think if we can get a break of 125.75, I do think we have a decent chance of running all the way down to 125 flat. Again, 125.06 is the 1 to 3 risk to reward ratio. But I think this 75 pip drop to the downside is possible, pushes deep into the curve here. And again, then maybe potentially look for a base and a roll. For this to go down, that's saying that the Canadian dollar is stronger than the US dollar. Looking at news for the week, seeing Canada's here, I'll just bring it up over here, right? Seeing this data here, this is why I'm kind of interested in this one. Because again, remember, it was dismal last time. If it's better than expected this time, if they kind of make changes saying, oh, you know what? Last time we lied. It's only 180,000 we lost, not two. And this one is it's only 9.3, not 9.4, right? If those will be positive for the Canadian dollar, we could expect more of a move. Where? Probably to the downside. So I'm kind of looking for, again, I'll readjust the lines on this one. I'm looking for this to come back down. I'm looking for it to base inside this level. And then once it bases, we'll readjust this level here to give us our entry, our exact entry, and then as well as our risk level and profit, and profit target, right? But I'm looking for it to come down in base. Again, the basing is the telltale sign that, hey, listen, this zone, all the orders are getting eaten up because it's going sideways, and then look for a continued drop down to 125. All right. Dollar Swiss. Dollar Swiss kind of got ahead of us here. So we are looking for a reversal. We really didn't have much, and it was starting the base yesterday. And it's funny, on an hourly basis, you're like, yeah, go. And it kept pulling back, right? It kept putting these things back in there. We were looking for a short. You guys can see it here. We were we were looking for the extreme hit, right? The home run, the grand slam. Unfortunately, it left without us. It rolled and it retraced. So kind of same thing on this one. I mean, Dollar Swiss is one of those finicky pairs. Excuse me. It's in a position right now where you will see some basing, right? And you can see there was a gap here. This is kind of the opening gap, right? Change this to white. You can see price was here, open low, and then came back up again. You can see how it based across the top, and it came in based again and based again. So it's breaking. Unfortunately, it's one of those ones where it's like, the risk on it is rather low. I mean, it's about, I guess it's not bad. It's about 23, which is a little bit more than you'd like, typically for a pair that doesn't move as often. And we really can't shrink it too much. I would have to say on this one, for me, it's more set up. I mean, again, looking at the curve, it is definitely more set up for me being bearish this position. I think profit targets to the downside on this one are you got to be looking to capture profit at 91, 90, 93. It's a decent mover to the downside. It's about 90 pips lower. One way you can try to trade this one is like on an hourly or the 30-minute. If we get a level of basing in here, you could potentially use one of these levels of basing as a pullback opportunity. Unfortunately, just looking at the way they explode, there's not really huge explosions right here. I mean, again, excitement in this pair is just not one of those things. But like even at the level down here, I would say bearish, but using this level right now of 20 pips doesn't make a lot of sense to me because again, it is not a pair that moves a lot. It's too much risk for what's available right now. But again, if you're looking for something longer term for this week, I would say bearish. This position is probably what's best. Now, your dollar yen. Dollar yen, we also said, was matching up with the Aussie yen, the euro yen, and the pound yen. And we had to set up here, and it left without us. Now, this one was a little bit different in, here, I'll go down to 30-minute. You can see that it was already starting to put a top in. It was kind of consolidating in, and there was a small way to play this one. But yeah, we were looking to get short, and again, looking for that extreme range. Unfortunately, it didn't take the extreme range. It kind of left without us. And it was a pretty decent rollback, right? 65 pips in this one to the downside is good, right? The problem with this one right now is this area here is not really the best area to pull analysis out of. It's very small candles. The wicks are bigger than the bodies. Not really any bit of explosive moves. And unfortunately, I mean, we have a small area here and then this little base, but there's just such little tiny zones in here. There's nothing big. Like this is a great little move. I like this move. I think this move is good. Unfortunately, because it's gonna be, let's go down to 15-minute. There you go. Seeing this move here, I'll delete that because it's left without us. Seeing this, and again, this is a 30-minute and a 15-minute. Here's what the actual zone is, right? And again, strong movement off. I think that's something we keep on our radar as a potential short down the road, right? Let's see. That puts us at, and it's only about 6 pips, so it's not a lot, but it is a potential area for next time. Okay, right there. Right there. 109.17. All right. And again, look at this. I'm on a 15-minute. Looking back, right? Look back from where current price is. There's no scenario here where you have this big clean of a push, right? It's just purely a grind. Grind, grind, grind. If you look here, is there a big push? Nah, it kind of limped its way off, right? Again, a lot of little candles, little tiny one here. Down here, there's something, right? At least that's a decent kind of drop. And then really, we're way down, right? So this is not a great area to be able to slow anything down. So yeah, I'd wait for it to either come back up again or let's establish newer numbers here. A little bit smaller down. Okay. All right, let's switch back over and look at the commodities now. All right, let's go here. We'll start with oil. All right, so oil. Let's go back up to 30 minutes. All right, so yesterday we brought up oil and we mentioned that we had a prior level here and we talked about it. It hit it, rolled back down again. Mentioned it, and again, if you see all these purple arrows, we said that oil was going to have a very difficult time going lower. We were bearish, right? We were in the upper third, so we were talking about, hey, listen, we got to find short trades in here. There's bearish opportunity here, but finding zones was going to be difficult because it had to chunk through all these small levels of buyers, and it did, right? It hit this level, it came back, hit another level, hit another level, hit another level, hit another level, dropped down and hit the next level, right? Came back up, and then again, you guys look across where this one hit, it hit the level right here. So it's funny, when I draw the lines on these levels, you can see where it keeps hitting the different levels. Right? There. And there. You hit here and bounce. You hit the lower one, bounce, bounce, bounce. You hit here the lower one, hit here the lower one, hit here the lower one. So you can see at least all the levels have now finally been chunked through to the downside. All right. So it does make our analysis a little bit better going further, going forward. There was a small level here at 63.79. It's kind of it's a violated zone that it pulled back to, so it's not necessarily the freshest or the cleanest level. I would say levels that I'd be looking for up here, and again, I'll move this over just to kind of clear it up a bit. We can take these two off. We don't need that. In fact, I'll actually pull these just to make it a little bit easier also. Let's talk about this level here. Going further. Again, decent base, got the entry, and this one came up based and then hammered it back down again. So I'd say one possible trade for tomorrow is if price is able to rally back up to the 65.90 to 66.20 area. That's decent. Again, do I want to initiate here? Probably not so much, right? I'm not as interested in it. And then vice versa on the downside on a 30-minute, probably looking at something over here. Um, and then changing this into a green level, right? So again, that'll be a cautionary area. Put it here and change that to green. Okay. And again, the reason why is because that was the start. The basing here, the punch forward, got front run, and then launched it forward again. So that's, and again, top section, short, middle, not so much, bottom, long is kind of how we're having these set up. And again, there is a racetrack here, so if we're able to break through this level, I think, did we ever find this on a 15? No, it's the old level. We'll leave it right there. Okay, and you can see it. There's this kind of push. Oops. If you're looking for something in this one in the overnights, look at that. 3 to 1 goes right to there. Okay. So again, any type of basing here, a break of 63.35. This one could roll back down, going for that 61.60 target, which again, I think either of these two for oil inventory tomorrow is pretty decent. Got to see how much movement we have in the overnight, though, as far as if those two are still valid. Looking at gold. So gold is punching, and we talked about this earlier. I mentioned before that typically a zone will only last 3-4 hits. There's 1, there's 2, there's 3, and 4 was the magical number that blew through. Came back up into that 1720 range, pulled back down, found those same exact buyers, because remember, right? Remember, the old sellers become buyers, right? Now we've also gotten this, right? We have now punched forward, this red candle, we base sideways, right? And then we pull back here, and now it's starting to go long, right? So again, for simplification purposes, you have that Harry Potter to the top side. Okay. I think 1725 is a decent level for gold. And again, where this catalyst could come from is if this drives up again and we see disappointing numbers in CPI tomorrow, that things are going backwards, showing there is no inflation. This is an inflationary play. And again, it's a combination. This is stimulus is going to be passed, as well as like future inflation. But the question is, if we're not seeing any inflation and this is all the pre-stimulus signing agreement deal here, then again, we're set up in a position to kind of roll back over. And we are above 1700, but right? Above 1700, but we went down here as low as 1675. So, could this be due for another roll? And the answer is probably yes, right? You guys can see it on kind of a pattern here. This is where the larger time frames are. Right? So, you know, definitely having some issues here. Definitely having some issues, and you can see we have a little bit higher above. So, keep those on your radar for tomorrow. This one isn't along currently right now, but 1725 is an area I'd be willing to take some shorts. I also do think it is important to note that this area right here, if we get any type of short or starting to roll back over, the 1702 was an area where we came up and stabilized. And again, psychological level, right? If we created a level here, you can say, hey, listen, here's a psychological level. You can see that what do? We came up, we based, we pulled back, and again, the same pattern, right? Up, back, and launched at 17, which is a psychological level. So I think 1725 is the next decent level short here. Silver's been rolling. And again, looking for longs, you can see that silver in the overnight basically did nothing but go straight up. It didn't have anything really to run into. This candle formation wouldn't have slowed it down. I mean, give it a little bit of a hiccup, punched higher. Obviously, the first big area would be right here, right? And again, we're kind of getting there now, right? We're starting to run into this, run into that group. I would say of the two levels, this is a level that we've hit a few different times. I would say, keep your eye on this level here, right? Do I need that other one? Just keep it there, but that's not a short entry. Trying to think where I put this one long from the bottom side. Probably here. See, I'm worried about using this level because, again, it spent so much time there. This one is okay, right? It's hit it and it's stabilized. But again, here's another hit. So you have 1, 2. This would be hit number 3 if it pulls back. I'm curious to see what it does with this level here, right? Right here at 26.13. Price has been there, price has been there, price has been there, price has been there. So I would assume it was pushed through. And the next, the best next best thing right now is this 2650. 2650 to the downside short. Doesn't look horrible. Yeah, 1 to 3 is right there. I think that's the next level, right? Hmm. The one thing I don't like, as I said before, we're in the middle of the range. Those are not necessarily the best, but I will say I do really like this. I like how this held. I like how easy the base and the push off was, and I like the fact that it got, it hit and dropped to the downside. So, yeah, I'd say I'll change this one to a red. I think that's probably a decent level, 2649. Okay, get a little bit of a push up. And again, stimulus signing tomorrow could help us on that one. All right. All right. With that said, that's it, guys. That's the last one. That's silver. We rolled through. I don't think there's anything else. I think natural gas has anything right now. Yeah, natural gas is kind of stuck in a wedge as well. That's pretty much it. Bonds are rallying back up again. The indices, again, you guys can see, look, we're basing in that level right now. We talked about it basing. NQ, we're basing. It did push through this. We're getting real close. YM, kind of the same thing, but again, all-time highs. This all-time kind of push here is not anything we can do. So, all right. So that's it for today. What I would say is, and normally I say mark your calendars for next week, but next week we do have that special how to day trade at Nadex event. There is, I believe, 5 of us speaking that day. I actually have a session. I can't show it yet because it's not approved by compliance, but it's a session on laser focusing using shorter duration contracts. We're going to talk about which ones are good, which ones are bad, what times we look at using them, how do we use them for news, how do we use them at session opens. And I believe I go on at 2:45 next week, or 2 o'clock to 2:45 or something like that. It's not our normal time at noon, so disregard the slide. Normally, we would this would be the one, but it's not. That's not where it's going to be. It's going to be a little bit later. So, if you have any questions, you're more than welcome to shoot me a message. And again, keeptradingsimple.com is the website. You can catch me on Twitch. I try to go on every morning at 9:30 Eastern time. Right now, it's been switched. It's Monday. It's Monday, Wednesday. It's basically Mondays and Wednesdays right now. And then I'm adding another one probably late on Sundays as well. If you have any questions, support at keeptradingsimple.com. If you want to check out any of my old videos, they're also on YouTube. Don't forget, you can also search on Nadex's YouTube page and find our morning analysis. Again, that's from 8:45 to 9, and that will be tomorrow morning. So with that said, I'm out of here. I'll catch you guys tomorrow. You guys have a good trading day. And again, remember, tomorrow is the news day of the week with CPI, stimulus, followed by oil inventory reports right behind. You guys take care.
Thank you.